how do you look at the ethical environment as opposed to the ESG environment when you're investing?
So we look at ESG factors as business risk factors to how we assess whether a business model is sustainable over the medium term. So this is what we look at. This is how we define a company being high quality or low quality. Of course, the fund is not a high impact ESG fund. We're not actively seeking on a company that is going to make the world greener, but we want companies that are quite in sync with what's going on in the world, because like if everyone is going to care about the environment, care about the social impact of what company are doing, then you want your company to be doing that too. And our company are doing that because not only that they're high quality, at the same time the management team, which is something that we do rate quite important factor to in our process, that they are high quality management team, which means that they are more likely to do the kind of the good things that either not just to reward the shareholders, but at the same time to make the business model sustainable over a long period of time, rather than you just make a lot of money in the next 1 to 2 years, but then every regulator is going to come after you in a few years time, and then that destroy shareholder return. So it's a byproduct of how we think about high quality businesses. So it's important. And at the same time, if you look at the composition of the fund, of course, it's a global fund, that we have very little exposure to emerging markets or to places that we have concern about the kind of the ethical or corporate governance side. So hence, it's also a byproduct why we ended up with a lot of our exposure to North American companies.
Okay, so it sounds to me like when you look at ESG, you're really focused on the G, with the assumption, I think correctly, that if a company is very well governed,
Yes.
the E and the S will effectively follow, because that's part of long-term good governance. Is that fair?
Yes.